Hello, everyone. Welcome, welcome. Very excited about our discussion today. We're going to be talking with Andres about starting tips to start getting involved in the stock market and just how to be financially responsible in general. So, very excited about this because I constantly have people asking me how I got involved in the stock market. And it's because of Andres right here. So, once again, this is fully interactive. If you have any questions, feel free to type it in, let us know. Or if you have some tips yourself, we would love to hear about that too. All right. Hey, Andres.
Hey, how are you, Cree?
Good, good. Thank you for showing me love with my little shirt in the back,
Hey, come
my
on,
pullover.
gotta represent now. Come on, N-Dowd Empire.
Yeah, it's yours at N-Dowd.com.
There you go. There you go.
Today. So yeah, so I was very interested in having this discussion
Yes.
because you got me intrigued about this whole, I don't know if it's a lifestyle, this whole thing. Because I
Mm-hmm.
remember you were in between jobs and you
Yep.
were just chilling, like not even really in a rush to look for another job. Like you were just, and I was like, you're not working, you're not getting out of employment. Like, what are you doing? And you was
Mm-hmm.
like, oh, I got my money for my stocks.
Mm-hmm.
I was like, oh, so you just living off of your dividends right now. And he was
Mm-hmm.
like, yeah. So you were able to be okay. Like you weren't stressing like people normally stress when
Right.
they get laid off. Cause I think did you get laid off or something happened, right?
I've been look, I'm in the sales game, and being laid
Right.
off is part of the deal.
Mm-hmm.
I've been laid off several times, but I've always ended up going back to the organization that's laid me off. So I've been fortunate. But
Yeah.
um, when in most professional sales guys uh, have to develop a certain level of financial acuteness because income is varied, right? Some years you'll
Mm-hmm.
make a lot of dough. Other years, things are tight. Maybe your commission plan changes. Maybe the market changes and you're not
Mm-hmm.
making the same amount of money. And I'm talking, sometimes the sway in income difference can be tens of thousands, even, into the six figures, depending on where you're at. So you always have to be,
Wow.
yeah. So you always have to be prepared. And so most guys in the sales, most guys and gals in the sales game, they kind of you'll tend to find that if they're seasoned and they've been doing it for a decade or two, they tend to be
Mm-hmm.
very financially savvy because you have to. You have to.
Mm-hmm. Yeah, because I remember we were talking about how people live above their means, right? And it's like
Yep.
they get these jobs, get these big paychecks, and then, like you said, you never, especially now in this market, we
Hmm.
don't know what's going to happen tomorrow
Right.
with a lot of our jobs, and you get laid off or furloughed or whatever, and then you're stuck because you were pretty much living. I didn't realize so many people with money are living check to check, or they're living off of credit cards, or
Right.
which
Hmm.
is really being in debt itself.
Yeah, and that kind of speaks to lifestyle and people are very elastic. We can adjust to our current situations rather quickly. So,
Mm-hmm.
when you come into a lot of money, then all of a sudden, it's easy to find yourself in that, beautiful 50 or $100,000 vehicle. It's
Right.
very easy to jump from a Honda Civic to, a 7 Series Benz, and that now becomes your
Mm-hmm.
new normal. Um,
Mm-hmm.
I think the challenge is to resist that until you're truly in a position where you can afford to maintain a certain lifestyle, and that's the whole part of being financially responsible, in my opinion, of course. That
Mm-hmm.
whatever your lifestyle is, your goal should be to bring yourself to a position that no matter what, you can maintain that. And if you're there now, you come into a position of where you're comfortable. And
Right.
yeah, you may not be driving, the kind of vehicle that you can afford. You may not be living in the type of home that you can afford, but
Mhm.
you can be very, very comfortable and not really stress over what's happening at your job, not stress what's happening in the market, and in this case, not stress over what's happening in the midst of a pandemic.
Right. But the stock market is very volatile right now. Literally day to day, it's all over the place. But I remember when what the reason why, because I came from baking, so I have investor friends. I know people
Hmm.
like professional investors, but what I appreciate about you is when I ask them questions, it's like it's like hearing another language because they do this every day, right?
It is
So the
technical,
lingo
yeah.
that they're talking, yeah,
Hmm.
and they think they're explaining it in a way that she can understand, but they're actually not. What I appreciate about you is that even with everything, because actually I want to give you props because before I met Andres, I was like one of those people who didn't vote, wasn't involved in politics, like didn't think it mattered, and he totally got me right together. It took years. You worked on me for years.
I wasn't giving up. Wasn't giving up.
Man, but because of you, I'm a voter and all this other stuff. But I like that you can break things down in a very basic format and not have people feel stupid or overwhelmed because this stuff can get very complicated, right?
Hmm.
Um, so to start off with, how did you get involved in playing with the stock market?
All right, so it started really. Uh, I guess you have to go way, way back to the early '90s when
Mm.
I got a good job, big company, and they had your 401k option. Um, but then what they also had was FSA option at the time, and that was to help offset medical expenses and things like that. So I got interested in that. Well, what's all this about, right? At that time, the organization forced you to put in, I think it was maybe 3% or what have you, in your 401k, and I took that and I left it. A few years later, looking the portfolio, I'm like, wow, there's a few $1,000s here. How did that happen? Well, it happened because consistent money being put in and it was being reinvested and dividends and interest and everything else accruing. So then I started to
Mhm.
pay attention. Um, and then I needed to understand, well, what was this all about? Like, so you have your 401k, but what was it really about? And then I came to understand, well, the 401k will invest your money in various different vehicles. In some cases, they auto allocate it if you don't do anything, but you have options, and you can stocks, bonds, RETs. The list goes on and on in terms of where your money can be invested in. So then I started to pay attention, and then I started to look at the material and read through it, and really kind of get my
And that's
arms
something a
around it.
lot of us don't do.
Right,
I have to say,
right.
I don't do that. I just know I put it in 5%, and I don't even know where that 5% is going.
Well, see, and here's the thing: all of that fine print, it's really there for a reason. And
Hmm.
I'll kind of dovetail that with uh, um, first income tax, okay? Because
Hmm.
they're all connected, and every year. Um, the tax rules change. They're, in most cases, they're small changes, but for certain individuals, those changes could be significant. It could be the difference between a, a big refund or you actually owing. It could be the difference
Hmm.
between how you invest your money in order to benefit from the taxations. We're getting a lot of background noise. I don't know if that's me or you. It's
Yeah, I
gone.
don't know what it is.
Okay, okay,
Oh,
okay,
that was the refrigerator.
okay. Got it. Okay.
Yes.
So what happens is that if you don't pay attention to some of those details, you can miss some opportunities. So as I continued along, I understood that monies were being invested in stocks and in some cases bonds. And then there were higher risk vehicles and lower risk vehicles. The higher risk vehicles teased you with bigger returns. The lower
Mhm.
risk vehicles teased you with more stability.
Mhm.
So understanding what all that stuff was made of kind of got me primed to start investing in stocks. So at that time, for I want to say the first 10 years, I spent really just focusing on the 401k, then leveraging FSA for any small medical bills that I had, because what FSA does for you is that it allows you to mitigate some of your tax consequences, right? So money goes in there pre-tax, and then you're able to spend it on medical expenses, even if it's just your copay on checkups and things like that. So
I
even if it
love
was just yeah, I mean, even if it's just a few $100, it's a few $100 that you wouldn't have paid taxes on, and depending upon your tax bracket, sometimes those taxes can be as high as 46% after all things are said and done.
that.
So
Mhm.
if you just put $100 in your FSA, it's like you made $46. So you have to look at it. You have to look at it like that. Now, as you get older, and usually your medical expenses go up, and that becomes more important. Then I discovered HSA,
Mhm.
which allows you to hold on to your money, whereas an FSA you have to spend it in that year. Okay.
Right.
Um, and then once I discovered FSA, I realized that, oh, okay, so this is another vehicle that I can use to essentially stockpile money and avoid taxation or deferred taxation.
Right.
Um, so here's what
You did
happens,
a
right?
lot of studying.
Yeah, I did a lot of stuff. I'm trying not to get too technical here. I want to keep everything very
Right.
surface. So here's what I did here.
Yeah.
So there was three vehicles. There was three vehicles that I was using, right? So
Mhm.
HSA, FSA, 401k. I got to the point where I was making enough money where I could sacrifice maxing out on my 401k every year. Okay, so I was maxing out on my 401k. I was maxing out on my HSA, and I continued doing what I did with my FSA, and that became a limited FSA, so there was only a few things you could spend it on, but that's getting technical. But the point is that I took every opportunity I could to mitigate my tax consequences, right?
Mhm.
Then leveraging what was already there in front of me, provided by my employer through my HSA and my 401k, I used that money to invest. Okay, so
Okay.
I looked at what the experts would talk about, and you listen to the Warren Buffetts of the world. They tell you just put it in the S&P 500 and leave it alone. So I looked at
Right.
that. But then what I did over the years, and this really started in, I want to say, 2007, as we started to go into financial decline due to the real estate crash,
Mhm.
2007, 2008, right? So then I saw that as a golden opportunity to buy certain stocks at low prices. Now, that did
Right.
not come without risk. So I did a lot of research. I had to understand what my risk was.
Andres does a lot of research. Okay. So.
It's in my DNA. It's what I do.
Right. But
I
you
always
don't have to do as much. I didn't do
No,
that
you
much
don't.
research.
You don't. And here's what I will tell you, right? So
Mhm.
if I can give you an example of what I did during the 2007 and 2008 crisis, I
Yeah.
looked at first what I kind of knew, right, based
Mhm.
on my profession, like what I do for a living,
Mhm.
the industry that I'm in, I looked at stocks that impacted that industry since I had somewhat of an understanding of what goes on in that industry, right? So if you're in the
Right.
travel business, I would tell you to look at travel related stocks. You understand what's going on.
Mhm.
If you are in the
In the medical field.
medical field, biotech
Mhm.
field, if you're in sanitation, it goes on and on and on. Energy. I would tell folks, look, focus on what you know first, right? Have an
Mhm.
understanding of what you know, and those companies that have stock that are on the stock markets, and they seem to be stable, and
Right.
you're comfortable. Here's the important part: you're comfortable losing whatever money you invest.
Right.
If
Because you're
if you
gonna
if
lose,
you
you could lose
if
money.
you
That's
can't lose it, if you can't lose it,
don't
listen,
invest
yeah,
it.
don't invest. This is not, I see so many examples of folks, on YouTube, just like we're doing right now, that will talk to you about how many millions of dollars they made investing in stock options, short sales. They did day trading and all this other stuff. For every millionaire, for every person that was wildly successful doing that, I guarantee you there are hundreds of thousands of people that lost everything. All right.
Right.
So, and this is
Or they
strictly
probably
my,
even lost everything and started, or they lost money
yeah,
and it just kept
just
going.
and kept going, or they
Yeah.
got lucky, and that happens, or they simply made some really really smart risk decisions. It's no different than
Right.
gambling, right?
Yeah. Exactly.
You have professional gamblers out there that consistently do well, and so you have
Mhm.
that, but that may not be you.
Right.
And look, I'm not a professional here in finance. I do not give financial advice. I simply give my opinions based on what I've seen and what I've and and
But you know what the best financial advice you gave me though that I apply
uh,
it now? I remember you telling me because I'm a giver. Like when people
hmm
ask me for money or they need help, like
hmm
I was always giving, and but they would be like, "Oh, I'll pay you back," right? And I remember we was talking about something. You was like, "Look, anytime you give out money, don't expect it back."
nope,
So now it's like when people do pay me back, it's like, oh, I got money, like a little extra money. It's not like I gave them my last and
that's
I
right.
screwed myself.
So you see now that attitude and that practice um,
Mm-hmm.
directly relates to investing, because that's the same treatment that you should give to your investments. So when
Mm-hmm.
you put that money in investments, if it comes back, great.
Right,
But if you lose it, you're not in financial ruin. You're right.
right,
You haven't rated your retirement, right? You haven't. And if there's anything that I would encourage folks to do, it's those two things: invest in things that in organizations that you have a high comfortability in. This
mm-hmm.
you kind of know it, and then two, only invest what you can lose. If
Mm-hmm.
you can't lose it, then you probably don't belong. You probably shouldn't be investing in stocks. Now, do your 401k and do your HSA and do your
Yeah.
FSAs.
And
Um,
something
uh,
about 401k, I just want to say right quick.
mhm,
My dad actually got to be a millionaire because when he first started, he
mhm,
maxed out his 401k. So he was
yep.
actually able to retire. He retired once at a very early age and he retired a
Mhm,
millionaire
mhm,
because solely off of his 401k.
yep. Mhm,
So I want people to, I mean, yeah, I'm like I love, like, I want everyone to be involved in the stock market. But if you have a job, you have a 401k, definitely put your money, invest in that heavy. I did have to fall back on my 401k where everything went to crap this couple of but I'm bringing it back up. So we're going to start off with Andres. How do we start? Question from Chiquita.
mhm.
All right, she don't know none of the lingo. This is like 95% of all my friends.
Yeah. Okay. So I would say the first place that you start is you start by allocating cash, right? So money that you know you can afford to lose. So
Mm-hmm.
that way you're ready to invest. You have to be ready to invest. So
Mm-hmm.
the trick is and again, what I do is that I have money set aside, right? And then when an investment opportunity or something that I perceive to be an investment opportunity comes about, right? So whether it's an IPO, meaning that a brand new stock that's hitting the market that I think is going to do well, or an existing company that may have seen a dip in their stock prices, but I have a high confidence level that they're going to do well in the long term, right? Um, so
So I
I'll
just want
watch.
to let me interject right here though,
Sure.
because I want people to understand. Because you are knowledgeable about this because you're reading what, you're watching
Uh,
what.
oh
For
boy.
me, I follow stock people on Twitter.
Yes. Mhm.
I'll put a link in the comments. There's this really good email that I get every morning called Morning Brew, where they go over the new stock and what's trending and what's not and stuff like that. But what are you reading?
So so between I have four different investment accounts, right? And in
Mhm.
those investment accounts, there's tools that are there for you. So let's say, for
Okay.
example, Fidelity, right? Fidelity does a very good job with all of the information that's there. So what happens is that you create watch lists, and based on your watch list, the news section will provide you with insight and recommendations, like articles to read, right?
So
So all
watch list.
yes,
We gotta break
we got to
this.
break that
Okay.
down. Okay,
Watch list. What's a
okay.
watch list?
So a watch list is where you essentially you create a list, right? It's an electronic list where you will put in the stock symbols for the companies that you want to watch. Okay.
Mhm.
And there's a lot of things that you can do with that watch list, right? So you can put in alerts, right? So let's say when that stock gets below a certain price, it'll send you an alert. If there's any relevant news that comes out about that stock, it'll send you an alert. When they're reporting earnings, so when they're basically saying how well they did in that particular quarter, it will send you an alert so you can read up on that. All of those things. So any company that you're interested in, you can put in that watch list, and you can create several different watch lists. So, for example, you have a watch list for energy stock. You can have
Mhm.
a watch list for financial stocks, so like banks and things like that, right? You can have a watch list for tech. I break it down, and even have another watch list for social media.
Mhm.
So you can watch the Twitter stocks, you can watch the Facebook stocks, you can watch
Mhm.
Exxon, you can watch Bank of America,
So,
right?
for what are the platforms that you're using to invest on? I use
Um,
Robinhood.
all right. So
Why is it? You just said it was four.
here's the thing. Yeah, I know. The thing is, I want to be careful because I don't particularly like to endorse any particular one. So I'll give you three, right?
I
That I
endorse
currently
Robinhood.
use. So I use Fidelity. I
Uh-huh.
use TD Ameritrade. I use Merrill
Okay.
Lynch. All right.
Mhm.
And I use a couple others, but those are my primary ones,
And
right?
are those user friendly, beginner friendly? No.
No.
Robinhood. Go, you get the Robinhood app, and it does what he's talking about. I'm
Mhm.
probably the wrong way.
Yeah.
You can create a watch list. So Robinhood is and with a watch list, because here's this problem right here that Shakita just put. We can't really say exact companies because um how do I say this, Andrea? You
So
need
what
to
was the
do the
question?
research. Like, you have to do the work, and you have
All
to. We can't tell you what you're going to feel comfortable with. It's
right.
all by after you're watching and looking. You know what I'm saying, and
Yeah.
seeing
So,
how
so
things are
yeah. So
going.
just so I'm clear, the question is, what are good companies to invest in, right?
Yeah.
So what I will tell you is this: there are men and women that go to school for a long time, that build their portfolios, that ascend to a position where they can list themselves as fiduciaries, meaning that they are in a position where they can suggest to you how you should invest your money. All right.
Right.
These are
And we're not going
so
to do this.
we're not going to do that. So be clear, be clear. They call themselves financial planners, but there are two different type of financial planners. There are fiduciaries and then there are non-fiduciaries. Fiduciaries is what you want. Fiduciaries essentially what that essentially means is that they are taking ownership of your money. They if you fail, it's their responsibility.
Mm-hmm.
Non-fiduciaries, it's not their responsibility if you fail. All right. So
Mm-hmm.
with a good financial planner who is listed as a fiduciary, they are in a position where they can tell you, look, this is where you need to put your money. And
Right.
this is that's the type of relationship where literally you'll get calls in the middle of the day by your financial planner saying, hey, look, we see movement here. We probably want to sell this. We see movement here. We probably want to buy this. You know, and all kinds of folks use financial planners. However, usually you have to um, be at a minimum investment level in order to really get there.
Right. Which
So
majority of them
yeah.
aren't.
So to really answer your question about good companies to invest in, if it was that easy, all of us would be rich, right? If it was
Right.
easy for me to just call somebody and say, hey, who should I invest in this month? I got an extra $100 sitting here. Who should I put this money in to this month? All of us would be we all be all right. It's not easy
Because we
like that.
all know, like, the people that hardly, we don't expect to fail, right? So, like, the Exxons and the, like, these kind of major companies. But, like, what was that big financial company that folded during the financial
Well,
crisis?
listen,
Too
there
big.
were a lot. There were a lot of unprecedented failures. Enron
Yeah.
was the big one, right? And then there was
Mhm.
also MCI, WorldCom failed, and that came from nowhere. There was Bear
Yeah.
Stearns that also did poorly. Lehman Brothers. So the list goes on and
Right.
on. You will always find these rock solid organizations that literally
Hmm.
in a couple months will go from being considered rock solid to failing. And it is
This is
something
why
even
when Andre said it's good to start off in your industry because you have
Mhm.
inside knowledge. So, like, Shakita's a nurse. So
Oh,
she has inside knowledge about the medical industry,
right.
this pandemic. Actually, she has
Hmm.
inside knowledge
Right.
about.
Right.
So she would be better off looking at, like, what types of stocks.
Well, see, here's what I would say to her is this, right? So you got to think about it. What business is all about commerce, right? Buying stuff or services, right?
Mhm.
So you're either buying a thing or you're buying a service, right? That's what
Mhm.
moves industry, okay? And even
Mhm.
with social media, it's a service, right? So the Twitters and so when you look at the medical field, right? I would say,
Mhm.
as a nurse or as a physician or even as someone that is a transport or someone that's simply cleaning up and things like that. Doesn't matter what your station is there. The point is
Mhm.
that you have unique insight. What products are being bought, right?
Right.
What cleansers are being used, and then who makes
Right.
those cleansers, right?
Yes.
Then you compare that to what other hospitals are doing. Are they all buying from the same place? And what do you think? Are they going to all of a sudden change this? Like, and
Right.
particularly when you look at the quality of the product. I mean, if you compare one to the other, and you say, yeah, this is the stuff that we like to use because it works the best, or maybe there's a
Yeah.
certain dressing that works the best, and it works the best, and you
Mhm.
see all the other hospitals are using it. Well, look at that company that
Right.
manufactures it. Look at the organizations that sell it because it's not just the manufacturers; it's also the suppliers, right?
Yeah.
And then
And
you
I'm
can
nodding my head so hard because I messed up and I got into that late. If I had the foresight, I was like, oh snap, let me look at the PPEs, like the companies that making the
right.
PPEs, but I looked too late and now it's high.
Yeah, the stock is high, and here's I want to do one caveat before we go further, and that is
Hmm.
that with stock, usually when you see the Twitter alerts, when you see these guys on YouTube talking, when you look on Mad Money and all these other financial experts. Usually, when they're talking about something and you're hearing it, a lot of times you're now getting it too late. Like so, the rise in the stock price already happened, or it's happening as it's being spoken about. The trick to really being successful at this is to understand from a long-term perspective
Right.
what what you believe will be successful. And it does, again, it is about belief, and it
Mm-hmm.
is partially about luck as well. And then,
Mm-hmm.
as you get more detailed
And common sense.
yeah, and common sense. But then also, as you get more into it, and you get more detailed and technical, there's other things that you
Mm-hmm.
want to look at with these organizations, like their management structure, right? Who's their
Mm-hmm.
CEO? Oh, and by the way, is that man or woman about to retire? Because that can change everything. And if they are
Yeah.
retiring, who's next in line, and what's their? So this is where you start getting more granular in your investments.
Right. And this is where people mess up because everybody wants to be told what to do. No one wants to really do research, and no one really wants to take their time. Because let me tell you, I got 4,000 in my investment portfolio. First of all, because I jumped in when everything started crashing in the beginning of the pandemic. So when everything went to crap, that's when I was like, oh, this is time to get in because everything is low right now. I got in on Disney when I remember I was talking to Andres. I was like, "Ooh, Disney's down to like $90, right?" Ooh, it's down to like it kept dropping, and then it got down to like 85. And I was like, I don't think Disney's gonna get lower than this. But where common sense comes in, who's gonna get rid of Disney? Is Disney gonna go out of business? Disney does. I didn't even know Disney was doing the basketball arenas because it's not
Mhm.
just the movies, it's not just the theme park. Disney has their hand in so much. So I had the foresight that I was looking to the future, right? I'm not looking into. I know, like they're going through a lot of mess right now, but I was like, yo, Disney $85, and I think their the top one was like 165 in the 52 week or something. Which we'll get into like what to look at when you look at
Look
the
at you
watch list or
talking
whatever.
technical.
So I was like, let me get on this now. And I think I have to look at what it is now. But
Mhm.
my money has grown exponentially because of that. I got it on Boeing because I'm in the airline industry. So I knew what was going on with Boeing. Even though it looked like they was going out of business, I knew Boeing was going. So that's why it's best to know your industry. Start off with there, but then also use common sense, right? Like you start when you create these watch lists. Also, someone told me to look at stuff that you actually use. So, like
Okay.
I'm big into Netflix. I'm big like Netflix is out of control right now. Amazon, but look at other things that you're using and follow those stocks as well. Because if you're using it, more than likely a lot of other people are using it. So,
Oh,
um,
one point I wanted to make, 'cause since you brought up Disney,
yeah,
you got a little technical there, and that was good because what you
okay,
spoke to was the fact that Disney is so diversified. It's not just their
yeah,
parks; they do movies, they do all this other stuff. So that same way that Disney is smart enough to diversify their business is the same way you're
hmm,
supposed to be diversifying your portfolio. So you
yeah,
never be in one specific spot. Have
hmm,
multiple different angles. So that way, if one thing goes south, then another one should do well.
yeah. Disney's at 127 right now, folks. I got it at $85. Okay. And why I said to look at this every day is because, especially right now with politics, it all goes hand in hand. It could drop down again. Who knows for what reason? Don't. Why are you breathing hard? Why are you breathing hard?
Well, no, the thing is that we never know where the bottom is of any particular stock, like how low it will
Right.
go, and we never know how high it will go either. We can intuitively look at things from a historical perspective and say, well, I think, for example, some of the big blue chip companies, right?
Yeah.
IBM is going to be relatively stable. You're not going to see 100% swing in 12 months in their stock price, right?
Right.
You look at a company like GoPro. All right, everybody knows GoPro. They've been doing very, very poorly. If you look at them just from like a 3 year perspective, I mean, there's folks that lost a lot of money in GoPro, but
Yeah.
there's folks that bought GoPro when it went really, really low, and then it double tripled. But that double triple, it was still a fraction of their initial price when they entered the
Yeah.
market. And so the reason why I breathed heavy was because I want to make sure that no one misses an opportunity just because a stock price had fallen to a very, very low number and now it's recovered somewhat because Disney may not, you got to think about what things are going to look like once this pandemic is under control.
Hmm.
None of us really know what our country is going to look like in 2 years from now, right? But
Right.
let's just say it's back to normal, right? Whatever we considered normal was, and people are packing those parks again. People are going on Disney cruises again. What's going to happen to that stock if it's now almost at 200? What's gonna happen to that? Is that going to look like 400? Is it going to look like 500? Is it going to split and then recover again? You don't know.
I hope so.
So we hope so, but there's
Disney.
other things. Yeah, there's other things that could happen, right? The pandemic could get worse. The parks could close
Right.
indefinitely, right? And then
Mhm.
all their leveraging is their cinema and some of their other ventures. So we don't know. So all that to say, I don't want to discourage anyone from buying like a Disney or any stock that has a performance characteristic like that over the last year,
Mhm.
while at the same time use your common sense and kind of
Yeah.
initially stay in the lanes that you have a high comfortability making an intuitive decision about.
Yeah.
Um,
And you have to
don't
also be very, I feel you also have to be very into like what is going on in the world. Like my weed stock was doing nothing 2 years ago, so I dropped it. And now I with this election, what, four more states legalized weed?
That's right. That's right. Yeah, and but you see that right there is a lesson for you because it could have gone the other way, right? You
Instead
you could
of
have you
it's a
could have lost
gamble.
money in that, and so there is a perfect example of an opportunity. Now, just because you sold it doesn't necessarily mean that you made a bad decision. It just means
Mhm.
that the cards turned in a way where you would have been more successful with that stock if
Yeah,
you
because it
had
wasn't
held on
doing
to
nothing.
it.
It was like losing money. And then
Right.
when I looked at it after the election, it is actually doubled.
Yeah.
So
So what I
look
what I
at
can tell you there's um well, I'm going to call out three types of investors, right?
that.
So you have your day traders. These are people that trade actively. So they'll buy a stock today, and then maybe next week they'll sell it if it gains some money, or they'll sell it because it's losing and they feel that it's going to go lower. And that's one of those rackets where I don't. I did it for a short time, uh, but it's not something that I would recommend for anyone that's not really built for that and isn't an expert in that field.
Mhm.
There are the investor class, which most of us are, and that's those of us that buy stock, hold on to it, and allow it to grow, and then benefit from dividends and things like that. And then there is the speculator. Okay, and with speculation, what you're doing is that you're looking at stocks that are either brand new on the market, IPOs, right? Or you're looking at stocks that have taken a dip, or you look at stocks that are either becoming disruptors, or maybe there's interesting acquisitions that they made that may put them in a competitive position. And you're saying, based on this information that I have, I think this stock is going to do really well, and as a result, I'm going to buy this stock. That is a
Mhm.
speculator. Um,
Mhm.
What I do is I kind of float between both those areas, right? I am a long-term investor, but I also do some speculation. And the speculation side is more risky than just putting your money into an S&P type fund, or putting your money
I don't
in
know what SOP is.
yeah. So S&P 500 is essentially a listing of 500 companies that trade on the stock market that are considered the
Oh,
top
the
500.
S&P 500. Okay,
S&P
gotcha.
500, right?
Gotcha.
So it's traditionally been considered a very, very safe thing to follow. So when you go into your 401k, for example, you should find an investment option that attempts to mirror the S&P 500. And there's also the Dow as well, which is top 20 big blue chip companies
So where can you find this?
the Dow, you will also find that in your 401k portfolio. And also, folks, you can go right on to WikiLeaks, for example, and you type in S&P or you type in Dow, and it will show you all of the companies that are comprised of the S&P 500 or the Dow. Right, and those are the two, at least in this country, and the Nasdaq, of course. Those are the three that this country typically follows, right? So you'll hear it all the time. The Dow is up, the Dow is down, S&P is up, S&P is down, right? This is what they're talking about. And Nasdaq is more tech focused. Is it up or it's down? Um, so in your portfolios, not just 401k, but also in regular brokerage accounts, which is like when you open up you recommended Robinhood. That is a brokerage account. In those
Okay.
accounts, they often do have ETFs, which exchange traded funds, right? Which will attempt to mirror the S&P, the Dow, the Nasdaq, so on and so forth. And you can invest in those, and that's where your money is relatively safe, right? It follows the market. However, the gains are not going to be huge. These are considered, places where you put your money for long-term
Safe.
holdings, right? Right.
Yeah. All right, let's go to some of these questions. Okay, and we said no money, no endorsements. She don't like me. Robin Hood. This is must be Sakina. Which ones allow me? So, Andres, can we ask you what you are investing in? What you have invested in? Are you comfortable with that question? You're not recommending. We just want to know what is in Andres' portfolio. He's not telling you the
I'll tell
investment.
you. No, I'll tell you because full disclosure, right? So
Right.
these are organizations that I'm invested in, directly invested in. Sirius XM, I'm a big holder in Sirius XM. They've done very, very well for me. Um, Now, when we I'm not going to share that. So, Sirius
It's not
XM,
on the list.
Sirius XM is one. Vonage is another, and that's also been very well over the years.
Vines?
Vonage,
Oh, Bonnet.
Vonage.
Okay,
Mhm.
gotcha.
Um, those are two of my biggest individual holdings outside of AT&T. AT&T is my largest holding.
Hmm.
Um, right now, almost 8% dividends on AT&T, by the way. So, um, uh, and as I continue to go down the list, I have the Exxon's,
Hmm.
I have Bank of America, I have Amex, um, I have there's a bunch of tech companies there like Nokia, Ericsson.
Hmm.
There's quite a few. I have to kind of just go through
That is
it.
okay. You have a long list. Okay,
Yeah.
so mine that I got into was the Disney. Like I said, I did Boeing. I did General Motors. That was big for Andreas.
Yep.
And
Yep.
then I did Carnival Cruise because I feel like the cruise industry sucks right now, of course, but eventually they're going to come back. Actually, no, and this is where you have to pay attention to what people are saying around you too. I know a lot of people who are booking cruises for 2021. A lot of people. So that's why I was comfortable with investing in Disney Cruise, well, Disney and Carnival Cruise. And then I have Exxon with Andres. And then I did some kind of like company that supplies to Carnival Cruises whose stock was like really low. So dividends.
Mhm.
When you were first teaching me about stock, you wanted me to look at the dividends. So
Yep.
I'm going to show you guys my Robinhood app. I don't know if it's going to be the same setup as the other platforms that you use, but when you look at the stock, it like shows everything and it has a dividend. Does it do
Mhm.
that on your other platforms?
Oh yeah, absolutely.
Okay. So like, and look, they're down today. Okay, you know that workout people, Pelotonin that everyone's doing?
Mhm.
The investors were like hyping this up, hyping this up. They said because they were actually running, they can't keep up with their orders. So they was
Mhm.
like buy, 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 like, and now they're down today. You see how this is a gamble? But but I'm watching them. I haven't invested in them yet, but I'm watching them. They're on my watch list, right?
Mhm. Mhm.
So it'll have, is this gonna work? Because I don't want to do this on my computer. Okay, so you see today's high. Let me turn this off. There's a glare, right? Hold
Yeah.
on. Let me
Okay.
turn off this light. Okay, that's
There we
better.
go. That's
So,
better.
Andres, what should we be looking at when it comes to these statistics?
Yeah, you gotta bring it back just a
Is
little
it too
more.
worry?
Yeah, I can't really make it out. The
Okay.
text is really
So
too small.
like here it opened at 123. It says open 123. That's what it opened at today, right?
Mhm. Mhm.
And then it has today's high is 132.
Yep.
And
Yep.
then under
So
that,
so
today's low.
yeah, yeah.
And then
So
under that is the 52-week high.
mhm. And 50,
And then
so
52-week low.
yeah, just so everyone's clear on that, 52-week high essentially means the highest price that that stock sold for over the last 52 weeks. So that's essentially a year, right?
Mm-hmm.
And then you can drill down more, and you can look at it from a 3 month, 6 month, year, 5 year, 10 year span, and lifetime,
So
right?
when you're looking at your stock, what are you looking at? What are you looking for when you look at that 52-week high and 52-week low? Because the 52-week
Well,
low is 1770.
yeah. See, that is you can't really you use that as somewhat of a guideline to um, point you in the right direction, right? Because just looking at the highs and lows, whether it's a weekly, monthly, yearly, doesn't tell a fraction of the story. You have to really look at what's going on with that particular company, and then understand why the increases and why the dips. And
Mm-hmm.
once you start to get granular like that, you'll find that stocks will perform well for a variety of reasons, right? Perform well or perform poorly for a variety of reasons. Like, for example, I alluded to earlier, change in leadership will have an impact on stock price, right? Uh,
Mm-hmm.
um, you can look at mergers and acquisitions, right? You just saw T-Mobile recently acquired Sprint, right? That had an impact on the Sprint stock as well as on the T-Mobile, and understanding why that is. Well, why did the Sprint stock go up? Well, the reason why the Sprint stock went up was because T-Mobile was buying Sprint for more than what the company's stock value was.
Mm-hmm.
So, so there's things that you have to look at. Now, if you looked at Sprint, for example, at the time, you would have thought that, oh, well, they're a bad buy because their stocks sold for, double, triple of what it was. But it turns out that if you bought at that time, you did pretty well when it was at low. I mean, they sold for as low as $3, below $3, and then with
Okay.
the acquisition, they went up to around $9, $10. So,
Yeah.
um,
I mean, for this, I like that it started off at 17 and it went up high. I
yeah,
think it
yeah.
shows. And then it makes sense with, I don't know how to say the name, Peloton, because everyone's
Peloton, right?
indoor. Yeah,
Yeah,
Peloton.
Peloton.
They
Yeah.
stayed in
Yeah.
more. Now, can you explain dividend? Because this is what's most important.
Well,
Actually, Peloton does not have a dividend
they
pay.
don't, and most stocks do not. And usually you have to understand that the one of the reasons why certain stocks will have a dividend is they use it as a tool to essentially keep people invested in their organization, right? So
Mhm.
when you buy a stock, the company wants you to hold on to it, and by offering dividends is a way to keep people invested in their organization. So
Right,
dividends, yeah. So essentially, what they're doing is that they're sharing the company's profit with the shareholders, right? So when you buy stock, you
right.
essentially own a piece of the company.
Yes.
Now, now here's what happens with dividends, and this is where this is really critical to wealth building as well as I see the question there: which stock will allow you to live stress
There's
free?
actually several questions here we're going to
Yeah,
have to go
yeah,
through.
yeah. But this is going to answer that in a roundabout way, right? And that is that you have to understand you have to be clear with yourself what your investment strategy is, and with that you also need to understand what it means to invest. And if you're investing, um, it should be looked at from a long term perspective, right? How much money am
Right.
I giving today, and what do I expect to
Hmm.
get back in return? So if you're
Right.
looking for a scenario where you can sit back and you can collect dividend checks, um, and
Which is what we want.
live off of dividends, right? That's
Yes.
the ideal scenario when you are in
Yes.
retirement, by the way. Um, and there's
Now.
huge, yeah, now, there's huge tax advantages today, the way that the tax laws work today when you are getting income from dividends versus income from working a job. So you pay
Right.
less taxes today on dividends. So there are huge incentives to why you should get to a point where you're able to collect meaningful dividends. So let's just
Right.
say, for example, we'll take a modest dividend rate. Well, depending on who you talk to, we'll take a dividend rate of 4%. Okay, let's just
Okay.
say that you have several holdings that on average will give you a 4% return in dividends every year.
Right.
We're going to assume that um, let's just say that the market continues to grow as it historically has done. It grows 7 to 8% annually. All right, that's typically the way that the market trends. But on top
Mm.
of that, you're also getting 4% back in dividends. There's two things you can do with those dividends. You can collect those dividends, or you can reinvest those dividends.
Right.
When you reinvest, it's kind of like a snowball, right? So the stock just keeps getting bigger and bigger. As it gets bigger, you're getting bigger dividends every year or every quarter, and then it continues to get bigger, and the dividend, and that's how you get to a point where, for example, you know, if you had, um, let's say, $100,000 in stocks that are paying a four
Be more
percent.
realistic.
Come again?
Let's be more realistic.
No, no, no. This is realistic, and here's why. Because we're looking at things
No,
from
for
a
the
long.
average person.
Are you an average person?
Yeah, but I don't have a
Okay.
hundred
No, no. Hold on. Hold on. Hold on. Hold on. Hold on. Hold on. So you have $4,000 today. What do you think that's going to
thousand.
look like? What do you think that's going to look like 20 years from now? This is
Well,
well. This is what I'm talking about. Because 20 years, if 20 years from now, if that doesn't look like 100 grand, then you and I are going to have a fist fight. Okay. So this is the part. This is the thing. This is the thing. This is what everyone needs to understand here. Okay. Like you, I've come from humble beginnings. Okay, so
Mm.
you're
Come
not
on,
you,
forget it.
right. All right. So we
I'm not from nowhere.
well, all right. I'm sorry. I'm sorry. Middle class Southern gal. I'm just I'm just telling you like this. Okay. So I know. Right.
Yeah.
I know both sides of the fence here, right? So I know
Mm.
what it's like when you're looking at in the idea of investing and you barely have any money to make that happen. Maybe you can do $100 a month or something like that. I know that space and I've been there, right?
Yes.
And I also
Let's
know the
talk to those
space where
people.
you right. I know also know the space where you'll get a windfall, whether it be from what you do at work or maybe you get an inheritance or something like that. And so there is always an opportunity, right, for growth. The thing is that when you look at investing, you have to look at it from a long-term perspective. And if you're not thinking
Yeah.
long-term, then you're thinking the wrong way. So yeah, we're talking, tens of thousands, hundreds of thousands, and millions of dollars, right? So if you take a
Okay.
very, very, very obtainable figure, which is $100,000, which by the way is less than what most people that hold 401ks have. All right. So 100 grand is a very, very realistic number when you're looking at a 10, 20-year perspective. If you
Okay.
have, if,
Andres is letting us know he has $100,000. Go ahead. But wait, before we get into this, we need to get into these questions because it's almost time to go and I gotta go to work today.
Mhm.
So we'll probably have you back on because this is a lot going
Right.
on. So is there a website that I need to go on to find these stocks?
Um, well, I would tell you really to start. Um, I would start with a brokerage account that you feel comfortable using, whether it's a Robinhood or whatever, because they have tons of resources right there. That's what I
And
would
your
tell you.
bank, because I actually do my
Yes.
invest. Okay, so maybe I should have been more. I do my research on Robinhood. I only bought one stock on Robinhood. I first started my dabbling on Robinhood. And when I say first start, I was investing like $5, okay? $5, $10 in different like real low stocks. But when I got real stuff, I went through Chase. I went through my bank. My brokerage is Chase. Like
Hmm.
I took my RRA money and I put it into stuff that I believe in. Okay, so your bank, whoever you're banking with, they have those tools,
Hmm.
right? All banks have this,
Yep.
not just Chase, not just Wells Fargo.
Not just
Okay,
Chase. They all have it.
right.
Yep.
They have a investment section, so that is something that where you can go and all these, even Robinhood, like not only did it show the stocks like how they were performing, it also shows news, the latest news about the stock,
Hmm.
and stuff like that. Okay, someone is shocked about AT&T. I don't know why y'all surprised. Yeah,
So here's what
yeah.
I would tell you about AT&T stock. I
Uh-huh.
would tell you that they were a year or two ago. They were removed from the Dow, right? So they were on the Dow for a little while, but they are
Mhm.
considered, they're if you look at what the experts tell you, they're considered a good investment buy for long term investment because right now their dividend rate is around 8%.
Mhm.
So
Which
you
is
know
pretty high because Disney's only
it's
1.2.
it's
I have
it's
some Disney,
ex,
but it's only
yeah,
1.2.
it's extremely high for an organization that has the durability of an AT&T. So
Okay. What is the best to invest in and make the most profit? So I don't know if this person was here earlier, but we can't really answer that question. You need to. It's a gamble,
mhm.
right, Andres?
Yes, it is. Yes, it
It's
is.
a gamble. Like what I said today. Peloton. I don't know if I'm saying this name. Peloton yesterday, everybody was following was like, "Yo, Peloton can't keep up with the orders. A good time to invest." It might be because their stocks are down, but a lot of people bought yesterday, so the stocks went up. Today is down, like it dropped.
Mhm.
So but who knows what's going to happen long term. So now I have to sit with myself and be like, well, okay, they're behind on their orders. They can't keep up with the orders. What's probably going to happen is they're going to find a new manufacturer. So I got to follow the news on them, what they're going to be doing, what they plan on doing and keeping up with the orders. And if it keeps dropping, figure out like how much money. For me personally, I don't like to invest anything over 100. I feel like that's too much. The only one I did was Boeing because everybody was thinking Boeing was going to go out of business, but I have knowledge that it wasn't because I'm in the industry. So like Andrea said earlier, it's a good idea to, I guess, whatever industry you work in, go from there because you have inside knowledge. Is there anything else you want to add to this, Andres?
No, I think you hit the nail on the head. Yeah.
Okay. Yeah, Kendra was saying you have to get in at the right time. We don't even know what the right time is.
Yeah. So there's a term called timing the market, and anybody that is worth their weight in salt will tell you that's in the business will tell you that you cannot time the market. You can't time the market.
Yeah, you just make a really good guess.
Yep, that's right.
It's expected for COVID to be another year. The swine flu was here for 2 years. Oh,
right,
that's okay. This is Shakita. So she's a nurse. So this is what I'm saying. She has inside knowledge. Everybody else, we think it's only going to be months.
No. This is just like the flu. It's never going away. It's only going to become hopefully more manageable, right? So,
yeah.
Whether it's through herd immunity, through using vaccines and things like that. So.
So these are the numbers. Was 100,000 the number, Kendra? I don't know. So this person says credit unions. Does credit unions have the same thing? Okay.
Yeah. Some of them do. It really just depends on the size of the credit union. But most banking institutions, regardless, are going to have some vehicle that you can leverage for investing, even if it's just like an individual retirement account. They'll have it.
Okay. So we have hit our hour. That went by super fast.
It really did.
Thank you so much. And I don't even feel like we even covered what I really wanted to cover with stocks. So we'll have to have you back on. I will put in the comments the website that is, and this, the emails that I get, because it's very, I don't know, have you heard of Morning Brew, Andres?
I haven't, no.
It's a really good email because the way that they talk about stocks in the financial industry is very like normal. It's not with the lingo, and they even do like jokes, and it's very I like to say it's not, you can't tell if they're liberal or conservative. It's just very straight to the facts with the little nuances or whatever. So it's really cool. No, Andres does not have a YouTube or anything. Andres does not have any way to contact. He only doing this as a favor. So, unless Andres, is there a way people can contact you for further information? Do you have?
Not really, but through you, if there's specific questions that anyone has, they can direct them to you, and you can send them my way, and I'll do my best.
Okay.
Yeah.
Fabulous. Yeah, because he don't mess with social media like that. He is on purpose. So yeah, but thank you for coming on, and hopefully we gave people how to start doing research, because this is not a get rich quick scheme. This is something this is something to pretty much create a whole nother set of income for yourself.
That's right.
Right.
Oh, one parting thing, folks, if someone's trying to convince you to buy a stock or to follow a particular path to financial wellness, you have to ask yourself what's in it for them. So just be very careful.
Oh, you mean like the kind of like invest in me kind of thing?
Well, yeah, or even invest in a particular company because you'll find online often, even in very reputable publications, where people that are already invested in particular organizations will
Hmm.
release information for one purpose, and that is to pump the stock up because they're also invested in it. So you just got to be careful.
Ah.
Yes.
Which goes back to do your research. So, as homework assignment for everyone, set up your apps, go to your bank, start looking at stocks that you're interested in. Create a watch list, like he was talking about earlier. Start stalking these stocks because I guarantee you, these next few months, it's about to go with this president and the new president. It's about to get very interesting out in these streets. Okay, do you agree?
I agree. I agree. But it's an opportunity, so we all should be
Yeah,
taking advantage of it. Yes.
take advantage, like these rich folk out here in these streets. Okay, thank you, Andres, for coming on. Talk to you later. Bye, everyone.